We are live. I'm Seth 3.0, and I'm here today with Jay, co-founder of Say Labs. Say is a sector-specific blockchain that's purpose-built for capital markets and DeFi. So we're going to be diving deep into Say today, why it's better than other blockchains out there that are doing DeFi stuff. And I'm also dying to find out why Jay thinks app chains are not the best solution for building products right now. So before we get started, make sure to subscribe, hit the notification bell, and the like button to get notified when we do live streams every Thursday. My guest, Jay Jog, is coming up next, right here on the Interrupt. Hello.
Hello, Seth. Good afternoon.
Thanks for joining me. I've been researching Say for like a little while. I met your colleague over at Cosmoverse, and I hadn't really done a whole lot of research about the project then. And it's when I met him that I started looking into it. I was like, this is interesting. So what is this thing? Who is it actually for? And why is it better than some of these other kind of app chains out there that are doing DeFi or other DeFi applications on like monolith chains and stuff like that. So yeah, I wanted to get you on today to understand how this product is positioned and who it's for, but also how it works technically, because as I've been finding out, you guys are doing some pretty interesting stuff under the hood to really optimize this chain for fast transactions and high transaction throughput and really optimize it for trading. So before we get into that, tell me about your background. And as I understand, you were working with Robinhood before, so I'm curious what you were doing there and how that experience informed what you're doing now.
Absolutely. Yeah. So first of all, thank you for having me on the podcast, Seb. Appreciate you taking the time, and thanks for everyone who's in the audience following along. So a little bit about me. I'm a co-founder of Say Labs, and I lead engineering. I personally got into crypto back in 2017. At that time, my roommate was going through Binance Launchpad, and we tinkered on a few different projects together. And afterwards, I ended up joining Robinhood. So I spent almost 4 years over there, saw the company 10x, and I was an engineering lead when the GameStop crisis happened last year. So I'm sure you were following along with, it was not handled very well. And I think the biggest reason for that is because there was a complete lack of transparency around what was happening. Robinhood was not communicating very well with insiders and with customers. And that just led to people becoming very, very unhappy with the entire situation. And that honestly highlighted to me how whenever you have these opaque systems, things, when they start going wrong, they become very messy very quickly. And we've seen this play out time and time again. Most recently, we saw it with 3AC and FTX. And one thing that people don't really understand is just how powerless you feel as an insider working at one of these places, because you put your reputation and your career on the line when you make a decision to join the company. And when leadership is just completely being opaque with you and not telling you about anything that's going on behind the scenes, it just gets extremely frustrating, especially when there are people on your team that are asking you questions and you have no real idea how to respond to them because you have no clue what's happening either. So after going through that experience, I became much more of an on-chain maxi. Whenever things happen on-chain, whenever things happen in a decentralized way, they're inherently trustless, they're inherently transparent as well. And that would have resolved a lot of the issues that we saw with, to a degree, with Robinhood and definitely with 3AC and FTX. So because of that, last year, we started building a decentralized Robinhood. More specifically, a derivatives exchange is what we started building at the end of last year. And then since then, we started looking into the infrastructure we could use to build something like that on. We ultimately realized that the infrastructure is lacking, which is what ultimately led to us building Say. So it's a little bit about my journey.
Yeah, it's interesting about the Robinhood situation. I was following a little bit of it, but not really in depth. But what was it? Was it the case that there was some a lot of opacity going on internally about user funds or what was going on there? Because I wasn't really following that closely.
Yeah, so Robinhood disabled specific stocks from being purchased. These were stocks that were extremely popular at the time. So like GameStop, AMC, for example. And I personally believe that the reason Robinhood did it was not malicious. It was largely because of capital requirements that they had with counterparties. But there was just no transparency around that at all. Like users just woke up one day and there had been this massive run, like this massive bull run on GameStop, AMC, and other stocks, and you just weren't able to buy these stocks anymore. And it was just extremely, extremely negative from a customer standpoint. And I mean, that specific day, the day after that, I got like dozens of messages, a lot of messages from people that I hadn't talked to in years. And people are just really unhappy. They're like, yo, what is going on? And I think Robinhood definitely could have done a better job. Like, I think the ramifications of that are still being felt for the company overall. Like, if that one specific event had not happened, I think Robinhood would have had a much more positive reputation. And I think they definitely could have done more for just keeping the community informed around why they were making the decisions they ended up needing to make.
Yeah. Okay. I see. Yeah. And I mean, being in Europe, like we don't have Robinhood here. Like I don't use it. I think someone showed it to me once. I mean, it's got a good UI and everything, so I can see why it's so popular. But yeah, so they just decided to turn off trading for these assets. I think I remember that. I kind of remember now. Now that you mention it. So given the events that happened in the last week, yeah, what's your kind of given what you've been through at Robinhood and having been through some sort of large company with lots of customers being opaque with their customers about what they can and can't do with their money, what is your feeling about what's happening now? Like, how does that feel to see this also happening very much in the crypto space?
Yeah, I mean, it feels pretty terrible to see all the things playing out in real time. I think with FTX specifically, it's especially bad because in the case of 3AC, it wasn't like normal users that were necessarily getting affected as much. But in the case of FTX, I think that it's a lot of people who are putting trust in basically in this centralized entity. And there was good reason to put in the trust because like the contract that they signed was basically saying that FTX could not do anything with the money that the users were depositing. And I think that there's going to be a lot of short-term ramifications for this. Like we're seeing this play out already. Like first of all, a lot of people lost a lot of money, so they're going to be less likely to engage in DeFi. Then there's also everyone who is basically losing their confidence in the entire crypto industry overall. So I think there's going to be pretty strong ramifications from that. And then there's also the regulatory side of it. Ironically, I think one of the really good things that is coming out of this is that DeFi's value proposition has never been stronger. Doing things on chain, doing things in decentralized way would have solved a lot of these issues because there's complete transparency. It's completely a trustless system. And I think that in any kind of centralized setup, if there are incentives to be opaque, and if there are ways that people can misuse that to get an edge over others, then I think we will see unethical players taking advantage of that. So inherently, like long term, I think the only real solution is going to be to do things in a trustless and transparent way.
Yeah, I think that a lot of the ecosystem and a lot of folks that sort of I gravitate around in my community, obviously the narrative has been this is why we need DeFi. It's paradoxical, but like this is what will actually accelerate the use of DeFi. That narrative feels great, and it's really unfortunate that people lost their money. And like I hope that this is a lesson that in 5 to 10 years from now, like we'll look back on this as like a pivotal point where everything shifted. But I don't think it's the only outcome. I think there's also a possibility that that the ecosystem suffers greatly from this, and that that it actually has the inverse effect. And what I mean by that is that it's possible that this actually pushes regulators to regulate the entire space as one. So putting DeFi and centralized exchanges sort of in the same basket. And by doing that, we're going to create, better centralized exchanges where this sort of thing likely is much more difficult to happen, for this kind of fraud to occur. But on the other side, basically like obliterating all of DeFi by making it very difficult for innovation to happen there, by making lots of use cases also like outside of the regulatory scope. So that's also like something that I worry about. But yeah, we need to keep pushing this narrative that DeFi is the solution. I mean, it's the reason why we're here, right? Like Bitcoin was created as a
Yeah.
way to exit the financial system, and all of DeFi and the entire crypto project is sort of a descendant of that ideology and of that project. So, we need to, really keep pushing the narrative. And, I think that there is like one positive thing that comes out of this possibly is that people build really great user experiences, and a lot of the technical, like this accelerates the technical, solving some of the technical challenges and user experience challenges that we've had around DeFi, and actually makes, DEXs much better than CEXs in the short term. So, it can go either way. Obviously, like I want it to go like sort of the positive direction, but it's a long road ahead.
Yeah, I mean, one thing that I'm honestly looking forward to is having some greater degree of regulatory clarity around everything that is happening in DeFi. Because I think one just problem about being an American working on anything related to crypto is just the lack of regulatory clarity about a lot of things. So at least I think one good thing that'll come out of this is is a greater degree of clarity. So yeah, I mean, difficult to comment on like what the actual repercussions and like how stringent the regulations will be, but I think having greater clarity is going to be helpful.
Yeah. Well, we'll see what kind of clarity we get. So yeah, let's dive into Say. And so like what is Say? And on your website you say it's a blockchain for capital markets. I think like infrastructure powering capital markets. And there's one thing that I hadn't heard yet, and I find kind of interesting, and I'm curious what it means. Is you say that Say is a sector specific blockchain, and how is that different from an application specific blockchain? What's the real distinction there, and how does it actually manifest in the product and like how people use it?
Absolutely. Yeah, so I mean, the story around Say is we were originally building that decentralized Robinhood, and then we started looking into every layer 1, every layer 2, and all the other infrastructure we could use to get an exchange built. And we realized that layer 1s today are holding back exchanges. They have no DEX optimizations. They all run into congestion issues, which is tolerable if you're an NFT collection, for example, but catastrophically bad if you're an order book. And they're also a tad bit too slow, even the newer ones like Aptos and Sui. And this isn't the fault of the layer 1s themselves. This is just because exchanges are very unique types of applications that have really stringent throughput, reliability, and latency requirements. So after doing that investigation, we started building Say, which is a layer 1 that is optimized for trading. So you basically customize every single part of the stack to help give exchanges an unfair advantage. So if you look at the distribution of layer 1s out there right now, they basically fall under 2 extremes. On one hand, you have general purpose chains like Ethereum and Solana, chains that are basically examples of the biggest chains out there. They're the ones that are most successful. On the other hand, you have application specific ones like DYDX v4 and Osmosis. And rather than taking either of these extremes, Say is building and exploring the design space right in the middle. So we're not quite general purpose, we're not quite application specific, but rather we're use case and sector specific. This helps unlock an entirely new design space. So the benefit of building an application specific chain is going to be the customizability. So you can tweak every single part of the stack to make sure you have the optimal infrastructure for your type of application. That is something that we benefit from. We're making use of Cosmos SDK, Tendermint Core, and we're able to optimize the entire product to help give exchanges the best possible infrastructure to build on. But we're also taking, to a degree, a general purpose route, where we have general purpose smart contracts that are allowed to get built on top of Say, rather than having Say only be an application specific chain. And what this results in is social coordination is the biggest benefit. So what I mean by social coordination is you can have multiple teams that are building on this ecosystem, and every single team is part of the same community, and they help the community grow a lot faster than if the community were just one specific project that needed to grow by itself. And that's why every single project that is a major project out there, it has this social coordination element to it. Like if you look at the top 10, 20 chains, they basically all have some degree of social coordination. And that is the biggest benefit that we get from the general purpose side. So with this sector specific approach, we have customized infrastructure that is built, and we also have this social coordination piece where multiple teams can build on Say. So at this point, we have over 80 teams that are part of the Say ecosystem, and they're all part of the same community, all helping Say ecosystem grow. And this specialization is something that we've seen in Web 2 as well. Blockchains are essentially just distributed databases. So we could look at the database industry for inspiration. It started off very, very general purpose with products like Oracle getting released back in the day, right? And then it gradually became more and more specialized. So now you're seeing products like Databricks Warehouse that are optimized for AI and ML. And we think that there's going to be a similar shift in crypto, where we started off with these general purpose chains, and now we're going to go more and more towards these specialized chains, like say getting built in the future.
Yeah, no, this makes a lot of sense, and it's funny because I've been putting together a deck right now, where a lot of these sorts of narratives are being presented, and with regards to the internet, like I think the internet evolved when things started to modularize and we had competition at every layer of the stack, right? And this is what enabled a lot of innovation to happen and optimizations to happen. And I feel like blockchains are kind of going through that same pattern, with modularization of the tech stack. So, the data availability, consensus, state and execution, but also of the services layer. So things like liquid staking, things like MEV. So there's a similar sort of modularization that's happening in the blockchain space that happened in the internet, over the last, I'd say throughout the early 2000s and, up until now, really accelerated in the last 10 years. What kind of social, like, I'd like you to talk about this social coordination stuff a little bit more. And what are the kinds of social coordination that we're looking for in a sector specific chain? And, what are the benefits to social coordination that sector specific chains would enable?
So I think there's the community aspect of it, and there's also the technical aspect of it. Technical aspect is pretty straightforward. If you have everything being part of one blockchain, then you can have atomic transactions that span multiple projects. And I do believe that will lead to substantially greater innovation than if you have projects that can't interact with each other. And I think that's one of the limitations, honestly, of building in Web2 right now. Like, different companies are not able to necessarily interact with each other in a super seamless way. Like, they generally have to have these massive agreements, and I saw how slow the process was when I was working at Robinhood. In DeFi, things can just happen in the scope of a day or two. People can set up smart contracts that are crossing multiple projects, and the innovation space is just much faster. And I think that's one of the limitations, at least right now, of doing stuff that is completely multi-chain, spanning different app chains. It's that you can't have atomic transactions. So there is what I mean by an atomic transaction is if you have two separate parts of a transaction executing something on let's say project A, and then executing something on project B. And if that thing on project B fails, then you will roll back that thing on project A. That's not something you inherently get with multi-chain transactions. In multi-chain transactions cases, you will have something happening on chain A, and then afterwards there'll be something that asynchronously happens on chain B, and there's no good way to revert the state on chain A if what's happening on chain B fails. So that's the technical side of it, and we think that will enable much faster innovation. The second part of it is more a social piece. And if you look at every single ecosystem that has become massive, if you look at Ethereum, if you look at Solana, even if you look at Terra, Terra is a algorithmic stablecoin. Their algorithmic stablecoin failed, but they were able to foster an entire lunatic community that was very, very strongly knit. And in my opinion, that helped the ecosystem grow, not just linearly faster. If there's N projects, I don't think it's going to be linear growth. I think it's going to be more kind of exponential growth that happens when you have multiple projects that are all part of the same ecosystem that can all help that ecosystem grow. So that's why I think most of the big ecosystems out there, they all have the social coordination element to them. And that's why I also think that sector-specific chains are going to be a lot more prominent in the future.
Yeah, I mean, with the technical aspect, so of course, when you're building a chain that has contracts living on the same state, you're going to be able to have this composability. Oh, I'm losing you. Yeah. Okay. Standing desk. Get it. So you're going to have to be able to have this. We're going to be able to have this composability and atomic transactions, right? So yeah, we're used to this. We're used to this in Ethereum, of course. With the multi-chain in a multi-chain environment, those messages have to pass between chains, and then there might be some kind of callback, or like one chain might be examining the state of another chain, but it's not entirely impossible. Yeah, I mean, like, with things like interchain queries and interchain accounts, I think we will get there at some point, and it will feel pretty seamless in the same way that it feels quite seamless today. Like when you're using an app that's making an API call, when that API call fails, like you get some message, or when it works, like you get some result, right? But in the end, I think it's inevitable that these things will happen. Right? The fact that we live in a multi-chain world means that we will have chains that talk to each other, means that we're going to have to like optimize this kind of the user experience around this. That will be different from, if you're just doing it internally on your own chain. It's like when you're on Facebook, like or any application, that application might have different pieces to it or different services, but you don't really, as a user, you don't know. There's just something happens, right?
Yeah.
So
yeah. Yeah, so I definitely agree that there will be better infrastructure and tooling built up around this in the future. I think that right now it is definitely a lot clunkier. Like, it introduces additional latency to the user experience. It also introduces a lot more complexity if you want to have like these callbacks that result in rollbacks happening on like Chain 8, for example. Like, if you had a market order getting placed and filled on Chain 8, then that's updated the entire state of the order book. And there's a lot of transactions that are dependent on that also got executed. Like, there might be 20 transactions got filled on the same market, and then you would need to somehow roll back the transaction that failed, and then also update the prices that the other 20 transactions got. And in that same time, there might have been second order effects of that. Like, those 20 orders might have been used to do other things. So I think it just becomes a very complicated problem to be doing seamlessly. But I do think that there will be a lot of innovation happening in this space, especially as there start to be larger app chains. I think it's kind of inevitable that there will be more people spending more time to build out this tooling. I think right now this tooling isn't at anywhere close to a terminal state yet. That's why I also think that it's an application specific chain. You are going to definitively have better infrastructure than any kind of general purpose chain. Like, that is one of the biggest reasons to build an app chain. I also think it's going to be harder to become as big as a general purpose chain unless you take more of a sector specific approach where you start fostering a community on top of your chain.
Yeah. So when you were describing this like monolithic chain, application chain, sector specific kind of in the middle earlier, what came to mind is Osmosis. And like, I see Osmosis as an application chain that will probably tend towards sector specific, because they've enabled CosmWasm, because they're and they're allowing, they are allowing, or they will allow contracts to deploy there in a permissioned way, because they're optimizing every layer of the stack and making it better for DeFi and stuff. So I feel like the application chains of today will become the sort of sector specific chains of tomorrow. I wonder if you think this is the case, or if you think things will just like remain very specialized.
I definitely think there will be a push to make something like that happen. I really think it depends on what the specific thinking behind the community of that chain is. For example, with DYDX V4, I don't necessarily think they will open it up to make it more sector specific. I think that in DYDX's case, they want to control the entire experience, and therefore they only want to allow DYDX branded products to be built in that ecosystem. In the case of Osmosis, we're starting to see this happen, and I think that'll happen for other application-specific chains as well. I think the fundamental issue with starting off as an app chain and then migrating over to a sector-specific chain is credible neutrality. Because as an app chain, you've already built your product, and at the chain level, you're always going to be supporting that specific product. And at the chain level, there's also going to be, I guess, overarching things that you are trying to aim towards. Like in Osmosis' case, for example, it probably wants to become like Binance, and there will be applications that are getting built on top that are now going to be competing against the core DEX of the chain. And in the future, they might be competing against the aspirations of what that chain wants to be supporting as well. So if you're building a perps exchange on Osmosis right now, in the future, Osmosis might try to launch its own perp exchange, and that credible neutrality piece is a little bit up in the air. Whereas if you start off from a purely general purpose or sector specific route, like we're not building any applications on Say, and I think that is going to, I mean, that's one of the reasons why we have over 80 teams that are part of the Say ecosystem right now, because they're not worried about what the future growth is going to look like, and if we're going to be biased towards any specific projects.
Okay. Is it fully permissionless? So like anybody can deploy there without like a governance vote or anything like that?
Yeah, so we started off wanting to be permissioned, and that is what resulted in like the first 5 to 10 teams coming on. But after chatting with a lot more teams, after doing a lot of debate internally, we've decided that we're going to be making it permissionless at mainnet Genesis. Largest reason for this is we don't want to be limiting the types of applications that can be getting built on top of Say. For example, if you look at NFT marketplaces, if you look at games, one of the biggest things that they're doing is creating tokens that are then traded. And
Yeah.
I mean, the entire purpose of Say is to be enabling on-chain trading. So we don't want to be the ones deciding like what applications are allowed to be getting built on Say and which ones are not. So we're going to be letting the basically open market decide. So yeah, Say will be fully permissionless.
Okay. What's what's the risk of, like, let's say like grows to become massively successful. There's all sorts of applications building there that are kind of in the capital market sector or like the finance sector, and then someone wakes up one day and says, "Oh, I'm going to like deploy my NFT marketplace there because like Say is super fast, and I don't know, there's like some features that are interesting for this," and all of a sudden it sort of gets captured by this industry that you didn't intend it to.
Mm-hmm.
Yeah. Well.
Yeah. So I guess the inherent question you're asking, like, how do we stop congestion from happening, right?
Well, how do you curate the ecosystem? I mean, like stopping congestion is one thing, but at a social level, it's like, how do you sort of curate the experience of, and I don't know if that's something you're looking to do, but like, yeah, what's the
Yeah, I
strategy
mean,
here?
we realized pretty quickly that it's difficult for us to be making any significant decisions around that. Like, we don't want to be saying whether an NFT marketplace should be allowed or should not be allowed, because currently every single application in crypto, it's the main thing that ends up happening. Like with these applications, they create some type of tokens that then need to be traded. So essentially, a lot of things that are very popular in crypto right now, like everything related to DeFi, also things related to NFT marketplaces, and like games are also built up around exchanges. Like they all need some infrastructure to be trading on. So we're not going to be excluding certain types of applications from getting built on Say.
Okay. And how do you expect it to scale? Like, we're going to get into the technical bit in a sec here, but at some point, like, I think the thing about application specific chains that that is the advantage here is that whatever happens, like they can always, like, the number of transactions will always be sort of limited to that application, and you can optimize that blockchain to have the highest amount of throughput for your application, but you're just dealing with one application space, and no one's competing for the bandwidth.
Mhm.
We've seen this problem in Ethereum where applications are competing for bandwidth, for transactions, for transaction throughput, and even though sure there's like 22,000 transactions per second, as you say on your website, like fast finality, what's the strategy if it becomes massively successful and then those limits are starting to get pushed? Are you thinking about like, what is it, like a layer, or they're like layer twos, or you start building your own ecosystem, or what's the strategy here?
Yeah, so a couple of thoughts around that. I guess first of all, one of the reasons we decided to make use of Cosmos and Tendermint is because it's extremely modular. So we've already done a lot of work to help basically push the bounds for what Cosmos and Tendermint can offer. In the longer term, we can try to replace certain parts of Cosmos and Tendermint. For example, changing the consensus mechanism, or changing the mempool implementation to give us higher throughput that we can support. So the core idea over there is the first approach would be to try to vertically scale and take the current infrastructure that we have and make that better so that we don't need to horizontally scale in any way. Then at that point, the second question becomes like, with any ecosystem, there ends up being a point where like you're just capped off at the amount that you can grow vertically. Then at that point, you have to grow horizontally. And then the question largely becomes like, what is the kind of access patterns that you're seeing in the current ecosystem? And like, what do they need to grow? So for example, if you're seeing a lot of applications that are not necessarily composing with each other, it might be okay to have a sharded architecture where you have different shards that are don't necessarily need to be atomically composing with each other. And that ends up being a very simple way to scale, where the main Cosmos, where the main Say chain becomes similar to the Cosmos hub. And then there's consumer chains to get built up. The other approach that we're exploring is having rollups getting built. And we're already seeing a rollup getting built on Say right now. That's called Nitro. That is a SVM optimistic rollup. So it's basically like Arbitrum or Optimism. Yeah. Except it's running the Solana virtual machine, so C level. So we're already seeing examples of that happening on Say. And it's difficult for me to comment exactly which approach will become more popular in the future. But I think a lot of it will depend on the access patterns, but there's a good amount of thinking that we've done from our side.
Yeah, that's interesting. Yeah, the Nitro team, I have them on my radar. I was thinking, should I get them on? Should I speak with them or not? So you think it's interesting what they're doing?
Yeah. So one of the things that we noticed from our side, like when we started chatting with folks that are building DeFi applications, building trading applications and other ecosystems, there were a lot of Solana teams that were interested in coming and building in the Cosmos space. The only thing that was preventing them from doing so is they needed to take their Solana smart contracts and convert them into Cosmos smart contracts. And there's a lot of lift that comes with that. Like, even though they're both in Rust, it still requires a substantial amount of time to have it fit the Cosmos specifications. And you also need to get it audited again, which requires more money. So if you could just seamlessly deploy your audited contracts in the Cosmos ecosystem, that would be huge. And that's why Nitro started building an SVM rollup, because it makes it extremely easy for Solana teams to start building in the Cosmos ecosystem. And yeah, I mean, there's a very clear demand from Solana teams to start expanding to other ecosystems right now.
Okay. Yeah, I think I'll reach out to them and get them on at some point. Cool. So yeah, let's dive into the technical stuff. So your doc says there's a twin turbo consensus engine with intelligent block propagation and optimistic block processing. So I want to know what that means. Then there's a native order book Magin engine. And you guys have optimized Tendermint, and there's like this parallelization. So yeah, let's walk through all the different technical optimizations that you guys have built.
Absolutely, yeah. Okay, so Say is a fully sovereign layer 1 blockchain with its own validator set. So we are not making use of any kind of shared security. We initially got started by building with the Cosmos SDK and Tendermint core. At this point, we have forked both of them to give us better performance for what we're trying to build. Now, at a high level, there are 3 things that we have done. The first is twin turbo consensus. So we basically took Tendermint and worked with the Cosmos team, worked with Zaki to figure out how we can make it faster. So now it's the fastest it can possibly be. We're seeing lower bounds of 300 millisecond block times in our internal testnet, and Tendermint just cannot become faster than it currently is right now. The second thing that we've done is we've added in parallelization. So we're currently the only Cosmos chain to make use of parallelization, and this has helped us substantially improve throughput as well. And the last thing is we have a native order matching engine. So this helps prevent front running, it helps exchanges scale. And it's just a primitive that's built into the chain that exchanges can make use of to very easily deploy. So
is this the only primitive that's in the chain, or are there others as well, like other kind of financial primitives?
This is the only financial primitive that's in the chain. So there's other stuff that we've built out as well, like native price oracles, for example, but I don't think that's at the same degree as this.
And when you say it's native, like it's a Cosmos SDK module, or it's like it sits at the application layer. It's not Cosmos contract.
The native price oracle and the order book, the order matching engine, those are both SDK modules that we've implemented.
Okay.
Yeah.
Okay, cool.
And through all of these changes that we've made, we're seeing, in terms of like the performance stats, we're seeing a lower bound of 300 millisecond time to finality in our internal testnet. And we're seeing an upper bound of around 22,000 orders per second that we can process in our internal testnet as well.
All right, like how does this consensus work? Yeah, what's different about this consensus?
Yeah, like let's do a deep dive into
a
few things I
so
mentioned.
like vanilla Tendermint versus say Tendermint.
Twin Turbo, yeah. So there's 2 things that we've done with Twin Turbo. First is we've changed the way that blocks are propagated, and secondly is we've changed the way that blocks are processed. So I can go over both of them. For block propagation, the way that things normally work with Tendermint is that there will be a block producer, and they will construct an entire block that'll have full transactions inside of it. So let's say there's transactions ABC, it'll have the entire contents of transactions ABC inside of that block, and then it'll break that block up into chunks and then send it over the network. And then validators will be waiting, and then they'll receive the different chunks that have the full contents of transaction ABC. The only problem here is that every validator has a local mempool. And what generally ends up happening is all of the transactions in the block, they're already there in the validator's local mempool. So because of the gossiping layer, the other validators, they will probably already have transactions A, B, and C in their mempool. So it's extremely inefficient for them to wait to receive transactions A, B, and C over the network, rather than just being told that like you should just look at having a very succinct identifier for transactions A, B, and C. So what we've ended up doing is we've changed the way that blocks. Sorry,
Wait, isn't this like SegWit? Doesn't SegWit work like this in Bitcoin?
I think that this is similar to what Bitcoin, at least the proposal that came out in Bitcoin. I'm not sure about the specifics of SegWit.
Okay. Yeah, sounds familiar. Sorry, go ahead.
Yeah. So so the block proposal message now will just have transaction hashes for A, B, and C. And then the validators, they will receive this block proposal, and they will then make use of, they will construct the block locally rather than needing to wait for it over the network. So we saw pretty substantial performance improvements by doing this. The second thing that we've added in is optimistic block processing. So the way that optimistic block processing works is normally with Cosmos and Tendermint, you have to go through the pre-vote step and the pre-commit step before you start to process a block. And this is definitely inefficient because most of the time the block that is proposed is the one that's being approved. So what we started to do is we have validators spin up a concurrent process. So they'll run some basic sanity checks on a block that they receive. Then they'll spin up a concurrent process and they'll go through the voting steps as normal, but this concurrent process will be updating a candidate state. So it'll start executing the block and updating candidate state. And at the end of the voting period, if that block is approved, that candidate state will get committed. And if that block is rejected, then that candidate state will get discarded. And we only do this for the first block at any given height. So if the first block fails, then for subsequent blocks in that height, we will not be optimistically trying to process it to prevent validators from getting just overloaded with trying to run too many concurrent transactions. So we also saw pretty substantial performance improvements from doing that. And both of those two things make up optimistic block processing, or make up twin turbo consensus.
Okay. So the block propagation, if I can summarize this, so validators, receive transactions in the mempool when they would typically in vanilla Tendermint, they would construct that block with all the transactions. That means that the block, quickly grows in size because there's all the transaction information. Meanwhile, that information is already exists on all the other validators' mempools. So instead of having the entire transactions where the blocks are only being propagated with the hash of those transactions, hoping that the other validators have them, and so they match them up whenever they receive them, whenever they receive the block. What happens if, like, let's say there's some latency? I mean, like, I realize in 2023, validators are quite professional. They're usually in data centers with high availability fiber connections. What happens if transactions are not equally propagated across the network? Yeah.
So the happy path is the transactions are in the mempool. The unhappy path would be where validators don't have transactions ABC in their mempool. So in that case, we still have the block producer, like they will send the proposal message that has the transaction hashes inside of it. And then they'll still construct a block and then send it over the network to the other validator. So if you're a validator and you don't have transaction A, for example, you can just wait and you'll get the block parts, and then you can just construct it using the same approach as you would be using with normal Tendermint.
Okay, so there's like a failback mechanism. So it sends the block with the transaction hashes, sort of optimized block.
Yes.
Validators are going to get that thing first because it's small, because it's lighter and smaller. But basically, like some short amount of time later, they'll get the real block or the full block.
Exactly. So it'll be the block proposal message that has the transaction hashes. So the proposal message is always the first thing that gets sent. With normal Tendermint, it would just have a block hash inside of it. In our case, we add additional data to it. So we add the transaction hashes inside of it. And then the other part of it where you send the entire block over the network, that part does not change. But validators can just construct the entire block locally as soon as they receive that proposal message.
Okay. Interesting. So do you have a sense of whether or not these sorts of optimizations would get upstreamed into vanilla Tendermint as a way to optimize it, or
Yeah, absolutely. So that's one thing we've been chatting with Marco about. So we'll figure out. I mean, all of this is already open source. So if anyone wanted to, they could upstream it themselves. Otherwise, we'll be working with the Cosmos team to upstream it after we launch mainnet.
Okay. And how does this fit into, like, I'm not super familiar with what's going on here yet. Hoping to do a podcast about this, but like, what's your sense of how this also fits into like the whole Tendermint to heterogeneous Paxos, thing?
Yeah, I don't have too many thoughts about that right now. So I need to chat more with the
Okay.
Cosmos team to figure out how those would work together.
Okay, cool. And so you've forked the Cosmos SDK, and so there's
So yeah, that was the first piece around twin turbo consensus.
yeah.
The second piece is around parallelization, which we can get into as well, unless there was a specific question you had around.
Let's talk about that. Yeah, I'm curious about that as well.
Okay. Yeah. So normally the way that a lot of blockchains work is they process transactions sequentially. So if there's 5 separate transactions, then each one will need to be run one after the other. And this is inefficient because a lot of times these transactions, they are not mutating the same state. So you can be running them at the same time. So if you're running all 5 transactions at the same time, it'll take less time for that block to get processed than it would if you're running all 5 of them one after the other. So the idea of parallelization is pretty simple. It's also something that's been extremely common in Web 2. And currently, no other Cosmos chain makes use of it because I guess the main reason why you would use parallelization is if you think that you're CPU bound in terms of processing time. So if you think that a lot of your time to finality or block time ends up being tied to how long it takes to process something. So there's some chains that have come up with solutions for this, and there's essentially 2 different camps of solutions. One is the solution that is a sell of what Aptos is doing. So this is where you try to run everything in parallel initially, and then there ends up being conflicts, and then you rerun those conflicts sequentially. I'm personally not the biggest fan of this approach because if the overall goal that you're trying to do is optimize for performance, having to rerun things leads to worse performance. And what typically ends up happening in any ecosystem or in any chain is there ends up being hotspots of activity. For example, on Ethereum, it might be stuff like Uniswap and OpenSea contracts that end up getting a lot of traffic. So a lot of the stuff that you try to run in parallel will end up having conflict anyway, and then you'll need to run that sequentially. So then the other approach is where the dependencies are defined upfront, and then you construct some kind of access list when that block is being processed, and then afterwards you will run that. And this has the additional complexity where the developers need to define the dependencies upfront, but it does result in better performance at the processing level. This is similar to the approaches that Solana and Sui are taking.
Okay.
Sorry, do you have a question?
No, yeah. I mean, like, I'm not very familiar with how Aptos and Sui process transactions, but so the idea here is that you can process transactions in parallel rather than sequentially. So can you give some like a concrete example here? So yeah. I think I've sort of figured. I think I sort of get it, but I'm not entirely sure.
Yeah. So let's say there's me and you, and then there's 2 other people. Let's say I'm trying to send some say from my account to your account, and then these 2 other people, you have person C trying to send say from their account to person D's account. So with sequential processing, first it'll be me sending to you that happens. Then afterwards it'll be person C sending to person D. These are independent events. They can be run in parallel. So it'd be faster to run them in parallel. So what happens with say is we have dependencies getting defined at the chain level that'll then get filled in at runtime based off of what is actually happening. So in the case of this bank send, there will be the resources that will be updating are the 4 of our bank accounts, right? So it'll be my account will be getting updated, your account will be getting updated in person C and D's account. So at runtime, at the chain level, there's a template that's defined. So it's basically saying for the bank send message, there's a template that'll get filled in that looks at both people's accounts. And then at runtime, it'll get filled in with all 4 of our accounts. And then now we know that these 4 accounts are the ones that are being touched. So then an access list can get created. And since there's not the same accounts being touched, both of these transactions would get run in parallel. Now, let's say that there's another transaction that is person C sending something to you. And let's say that the ordering of transactions within the block is first I send to you, then afterwards C sends to D, then afterwards C sends to you. Then in that case, we know that there's a dependency. The dependency over here would be that transaction from C sending to you can only run after I'm done sending to you and after C is done sending to D. So in that case, the access list would get created where you have the two parallel transactions initially of me sending to you and then C sending to D. And then afterwards, there's the other transaction of C sending to you that is dependent on the two earlier transactions. So we basically have something like that getting constructed at runtime.
Okay. And is there an opportunity like to like, I don't know, front run transactions here where you could potentially be executing a transaction like on some other part of the chain, whereas like this part of the chain thinks that it's perfectly fine and like there would be some conflict? Or
no, so that will be, everything is fully deterministic. There's no possible way to do that with the current Say implementation. And that's because there is a pretty clear ordering of transactions within the block. So as long as that ordering has been defined, the processing of it will be completely deterministic. So you still need consensus on the ordering of transactions within the block, and then at the execution layer, you will be able to process in parallel.
And when you say that it's being parallelized, and like the processing is being parallelized, you're talking about like actual validator nodes and how they process these transactions on their CPU. That it's at that level?
It's at that level, exactly.
Okay. So that optimization, like that creates enough optimization to be significant? Like, how significant
so
is
when
this?
So we're still running load tests on this specific piece, but we anticipate it to be very significant when there's a lot of different types of messages coming along. So parallelization ends up being useful when there are parallelizable workloads. So if you have everything going through one smart contract, then the effects of parallelization will be minimal. But if you have a lot of different activity, like different types of activity happening in ecosystem, then it will be pretty substantial in terms of the performance improvements. That's one type of work that we've done, which is deliver TX parallelization. So that's what we were just talking about. Like in the Cosmos SDK, the way that you will be processing is there'll be a begin block stage, then there'll be a deliver TX stage, and then there'll be an end block stage. So the deliver TX stage is where all normal transactions get processed. And then you can also define additional functionality at begin block and end block. We actually have two types of parallelization. We have stuff at deliver TX, and then we also have stuff at the end block stage. So in the case of Say, we wanted to make use of frequent batch auctions, which we can get into later, but basically the native order matching engine runs at the end of the block. And because of that, we also have parallelization happening at the end of the block, where independent markets will be getting run in parallel with each other. So if you have like a Say spot market and then a Bitcoin perps market, they're not dependent on each other at all. So they will also be getting run in parallel. And in that case as well, it's the same kind of idea where if you have different markets, a lot of different markets that are being processed, that'll lead to substantially improved performance. If you basically only have one market where all of the activity is happening, then the performance improvements will be minimal.
Okay. Yeah, that's interesting. Yeah, I hadn't considered that, at the validator level, parallelizing transactions was such a performance improvement. But I guess, I mean, if you're running like a blockchain that has like tons of transactions and you can parallelize some of those, I suppose, then you can produce blocks much faster.
Exactly. So just to be clear, this is at the execution stage that it's being parallelized. So validators will agree at the consensus level that transactions A, B, C are getting run in this order. And then when they're actually executing it, being able to deterministically parallelize the transactions will improve performance if there's parallelizable workloads.
At execution. Yeah. So on state transition, essentially.
Exactly. Yeah.
Okay. Yeah. That makes sense. Yeah. Cool. Let's talk about this front running protection. What's the approach here?
Yeah. So Say has a native order matching engine which runs at the end of the block, and there's a couple of things that it facilitates. One is front running prevention. The other piece that we can talk about as well is order batching. So around front-running prevention, what would normally happen when you're processing transactions is they would be getting run one after the other. In the case of Say, what we do is we aggregate all these transactions together at the end of the block, and then we execute them at the same time. So the execution price will be at a uniform clearing price. So it's going to be a price that is the same price for everyone. So to make this more clear, let's say that the order book has two sell orders on it. Let's say one sell is for $10, the other sell is for $11. And then two market orders come in to buy that asset. And let's say that all of these are 1 unit each. So what would normally happen with sequential processing is the first order will get filled at $10. The second order will get filled at $11. So the ordering of transactions within that block matters. If you're first, you'll get a cheaper price in this example. With frequent batch auctions, they both get filled at the same price. So they would both get filled at $10.50. So the market orders would get a more fair price within that block. It also makes it so that the ordering of transactions within that block no longer matters. And whoever has placed the limit orders, those makers would be still getting the exact prices they wanted of $10 and $11. So we are making use of frequent batch auctions for this processing at the end of the block, and it'll help prevent any front running related to order book transactions within the scope of a block. Does that kind of make sense so far? Sorry, you're muted.
Yeah, it makes sense. I'm wrapping my head around it. So, yeah, and so how does this fit into your, say, broader like MEV strategy? Because some chains like Osmosis have wanted to internalize a lot of the MEV at the chain level. Others are letting markets kind of decide how MEV should be distributed. What's your strategy here?
Yeah, so the first line of thinking we have is we should try to prevent all negative types of MEV as and when we can. That leads to the best user experience. So that's why we've added in frequent batch auctions to help with front-running prevention, because that will help prevent this negative MEV. Now, we also realized that it's impossible to completely prevent MEV. First of all, there are some types of negative MEV that validators can still do. One example would be multi-block front-running. So in the case of this order book example, if you have validators that control 3 blocks, so if there's validator collusion, they control 3 blocks, and you submit a transaction to purchase an asset, and let's say that asset is $10 and you accept up to 5% flippage on it, so you're willing to buy it for up to $10.50. A validator could see that, and then they will just exclude your transaction in block A, and they will put in their own market order to buy that asset for $10. Then in block B, they'll place a limit order to sell it for $10.50. And then in block C, they'll include your transaction in that block. So your transaction will get filled at $10.50. So that's an example of multi-block front running. We are going to be
Is this common
is
this common for is this like a common MEV strategy in, say, like Ethereum or other chains?
I don't think multi-block strategies are that common yet. They're substantially more complicated. I think in the Cosmos ecosystem as well, it's not common. However, with that being said, like this is a theoretical approach that could happen, and once there starts being greater just volume of activity happening, it'll become more and more profitable to be trying to run strategies like this. So because of that, like one thing that we're looking into is randomizing block proposers. So right now with Tendermint, it's deterministic to know who the block proposer is. There are other chains that have made use of logic to randomize that entire process. So that's one thing that we're looking into as well. That can help prevent that type of negative MEV. But for anything that's not related to the order book, for example, if there's like an AMM built on Say, we can't prevent front running on that. And then there's also other types of MEV, like liquidations and ARBs, that are generally considered to be positive for the ecosystem. And we would want to prevent spam tied to those types of MEV, because what happens on Solana, for example, right now, is that if there's a liquidation or an ARB that is extremely profitable, a bunch of people notice it. And if you have to pay a fraction of a penny to get in a transaction, it's extremely profitable for you to just spam the network with as many transactions as you can to try to be the first one to win that liquidation or ARB opportunity. So we, rather than having like that be the default mode where like people just try to spam the network, what we want to have happen is a system similar to Flashbots on Ethereum, where there's off-chain auctions that happen. And these off-chain auctions would be people submitting private transactions, and then whoever submits the highest bid will win a specific opportunity. For example, win a liquidation or win an ARB. And then that off-chain node will submit a prioritized transaction bundle to the core, like whoever the block producer is going to be. And then from there, that block producer will just make sure that that transaction gets prioritized, that bundle of transactions get prioritized. And then there will be MEV redistribution happening as well. So whatever the bids were that were submitted to these off-chain nodes, they'll get redistributed to validators and stakers. That's what we think will happen in the longer term. I'm also not the biggest fan of having in protocol MEV, specifically like the idea of, say, having logic getting run after every single transaction to try to arb across different markets, for example. I personally think that that'll lead to additional complexity at the chain level, and that will discourage sophisticated market participants from coming in, especially when when you have these off-chain auctions happening anyway. That'll result in most of the MEV being redistributed to validators and stakers, so being redistributed to the chain. So I think that there's less upside tied to an approach like that for Say specifically.
Okay, yeah, I mean, caveat, like one thing here, like MEV is not a topic that I'm like very familiar with, like sort of at a high level. So I mean, I understand that there's what is considered kind of good MEV and what is considered bad MEV, and then there are chains that have the approach of wanting to internalize all of that MEV or internalizing the bad MEV or kind of minimizing the ability for the market to execute on the bad MEV while leaving market participants the ability to compete on the good MEV or like non-value extracting MEV or whatever. And then there are chains who are just like, do what it like. Market participants can capture all of the MEV, and I think this is really the kind of the Ethereum flashbot approach, where basically it's all up for grabs. Osmosis would be sort of on the other end of that spectrum. It sounds to me like, from what I'm hearing, there's a desire to capture some of the quote unquote bad MEV while leaving the rest of it up for market actors to compete on.
What I would prefer is for there to be no bad MEV on Say, and we'll do whatever we can to prevent that from happening. We also think that validators in the Cosmos ecosystem, to an extent, are going to be like, because their reputation is on the line on every single chain that they're validating on. I think it's going to be less likely for them to engage in bad MEV. With that being said, it's still a possibility, and like if there's nothing we can do to prevent it, then it makes the most sense to have that get redistributed to the chain rather than having that go entirely to whoever the searcher is that identified that opportunity.
Yeah, I think the question here, and correct me if I'm wrong, the issue is that it's, sure, there's a reputational risk, but it's very difficult to identify when a validator is in fact trying to capture the bad MEV. Is that like, so unless you're doing like an audit of their software,
doing like a one-off, like noticing it in a one-off case is going to be more or less impossible because you don't actually know what transactions the validator had received in their mempool when they were choosing to order those transactions. But it's definitely possible to start seeing patterns of behavior. And I think that's what a lot of these audits that have been performed retroactively to see like how much MEV is there on Ethereum or like how much MEV is there on Osmosis. I think that's one of the things they look for as well. But yeah, in the case of like a one-off thing, it will be difficult to identify that.
Okay. I heard somewhere that, and I haven't confirmed this, so this might be just rumors or hearsay, but I heard somewhere that Osmosis was discussing penalizing validators that run MEV software. I don't know if you've also heard this.
I'm not familiar with that. No, I have not heard those rumors.
Then let's just forget I said anything. So let's talk about this order matching engine. What does that look like, and how can applications building on Say leverage it?
Yeah, so it is a primitive that is built into the chain level. So it's an SDK module. And if you want to build an order book based exchange on Say, you can make use of that module. And in your smart contract, you would just need to define a few functions around how order placements, order matching, order basically settlement would work. And then you can very easily deploy that smart contract, and then Say will handle the rest of it. So Say will handle the entire process around order matching. It'll be storing all of the state tied to the order book in the chain itself. And it'll also be handling settlement of funds once, depending on the behavior that you've defined. So it makes it very easy for you to deploy these smart contracts, and it'll also make use of frequent batch auctions under the hood, so that any smart contracts you deploy that you want to be making use of with this order matching engine will help prevent order book related front running from happening.
Interesting. So at a high level, like, this is a CosmWasm chain, right? We haven't talked about this, but I presume applications are building using CosmWasm.
Yeah, so in the longer term, we envision that it'll be completely language and execution environment agnostic. Like in Web 2, no one really cares about what language you're using, whereas unfortunately, it's extremely critical right now in Web 3. So to get started, we are making use of only CosmWasm, but in the longer term, we envision that there will be multiple execution environments supported at the chain level.
Really interesting. Okay, so you could have CosmWasm as a module. You could also have like Ethermint and any other Cosmos SDK module that's or execution module.
Exactly. So yeah, like I guess the obvious one would be EVM to get started with. And I mean, under the hood, what's really happening with like the EVM module on Evmos is it just creates Cosmos SDK messages, and then these messages are interoperable if you're able to define the behavior with other Cosmos SDK messages. So we can make that EVM be interoperable with the rest of the chain and be interoperable with the order matching engine. And we can also do that for other types of execution environments. Like I think SVM and MoveVM would be two of the other big ones right now, but whatever ends up being popular in the future, it is possible to support that. The only downside is it ends up being a non-trivial amount of work to build it in at the chain level. So I think that that'd be the biggest thing that would potentially slow down that process.
Yeah.
But yeah, I mean, that's one of the reasons.
In the interest of specialization, I mean, isn't there a case also to be made just to have one execution environment or like a very specialized execution environment? And also probably in the interest of composability and having reusability of code.
So I mean, for composability, that doesn't necessarily get hurt if you're like the really good benefit of making use of Cosmos SDK and Tendermint Core is that you have complete customizability over every single part of the chain. So you can still have composability between smart contracts. Like if everything under the hood is just becoming a Cosmos message. But yeah, like the other point that you're making around potentially having only one execution environment and then just spending all of our time trying to optimize that execution environment. That is one thing that we thought about. The other kind of line of thinking would be we want to make things as easy as possible for developers to be building, because all developers they really want to do is focus on building things, and we can just handle the rest of it to make that infrastructure as scalable as possible. And I think that's going to be the approach that results in the most developers coming on if you make it as easy as possible for developers to build on that ecosystem. So that's the approach that we're leaning towards right now, to just make it as seamless for developers as possible.
Okay. Yeah, so who's building? Like I was on your website and saw that there's like an ecosystem page and there's like tons of applications here. But yeah, you mentioned like 80 teams building on Say,
Yeah, so we originally got started with the project earlier this year. May we launched our initial testnet, and then around August timeframe is when we launched our incentivized testnet. At this point, we have over 80 teams that are building on Say ahead of mainnet. And these were originally teams that just got started building DEXs that are making use of the order matching engine. But now it's a lot of different types of applications that are building. We have some NFT marketplaces that are interested in building as well. We have a lot of core DeFi primitives getting built, and we are now starting to see some more native teams that are trying to build, I guess, unique applications on Say that are not getting really built anywhere else. So yeah, over 80 teams building right now. We also recently launched an ecosystem and liquidity fund. So this is a $50 million fund that market makers and investors have put money into that will basically be used to provide liquidity to exchanges building on Say. It'll also be used to invest on projects that are building on Say. So once we announced that, it became much easier for native teams to start building because there is a pretty clear path for them to be both getting liquidity and also getting funding. And yeah, so we're starting to see a lot more middleware type applications. So one of the projects that announced recently is Cargo, and that is a prediction markets middleware that is building on Say. So basically, other projects can come and build their own prediction markets on top of it, and it becomes very easy to have geographically specialized prediction markets getting built.
Okay, interesting. Yeah, folks should go to saynetwork.io/ecosystem. There's a whole list of apps here. So I see you have like a derivative DEX, there's a synthetics DEX. Obviously things like Axelar are integrated here, so people can bridge their tokens in and out if they're not using IBC. You have Cargo, this like Kyve. Yeah, so I had the Kyve team on a couple of weeks ago, and I was curious, what's this partnership that you guys have done with Kyve, and what's the play here? How is Kyve providing like their infrastructure to Say?
Yeah, so we have a native Oracle that is built into Say. The way that Kyve would be helping would be providing one-off price feeds that Oracle doesn't help with. So the way that the native Oracle works is validators, they will be required to submit price feeds for governance approved assets. If the validators submit a price feed that is wrong, or if they submit a price, or they just don't submit a price feed, they'll be getting slashed. So we anticipate that this will be really good for certain types of assets. But if you're running a prediction markets, for example, and you want to get the outcome of a tennis match, it's not really appropriate for the native price Oracle to be supplying that information. So rather than doing that, we're working with Kyve to help facilitate those kind of price feeds or outcomes for different events. So that is one way that Kyve is going to be getting involved with Say.
Okay, that's cool. Yeah, I really like this project. I think it's super cool. I mean, I'm a big fan of permanent storage stuff, and I just think that, like they're just killing it. Yeah, very cool. Yeah, before we wrap up here, like, what's the long-term vision? Because one of the, like, when you first go on the Say website, it's like, okay, this infrastructure powering capital markets, and you guys want to be like a decentralized NASDAQ, and there's the narrative feels to be, I mean, I don't know if this is what you're looking for, but there seems to be this kind of institutional like you're trying to attract folks that are looking for a very professional chain, perhaps even institutions. Is that the case? And if so, like, who are you targeting with this chain? What kind of applications do you hope people will build there beyond your run-of-the-mill kind of DeFi degen app?
Yeah, so I mean, our mission is to build the best possible infrastructure for exchanges. Our long-term goal is to have Say be the primary place where on-chain trading activity happens. And this is not just restricted to retail. We want it to be the primary place where other types of players also are primarily trading. So, for example, institutions. But realistically, though, like, institutions are never the first movers. It's usually retail and power users that come over first. And once there starts to be organic retail volume, that's when institutions start to come over. So what I anticipate will end up happening is there will initially be the more degen power users that come over from other Cosmos chains, that come over from Solana, Ethereum, like the more on-chain native folks. That'll be the first tranche of people to come over. Afterwards, I anticipate that there will be applications on Say that become very popular for retail to be using. For example, prediction markets could be one of them, or it could be perps or something else. That'll result in more retail users coming over. And then afterwards, we'll start seeing more institutional adoption. So I don't think it's going to be like a 2-month process or anything. I think it'll be definitely a pretty long-term process. But I think long-term, that's the most likely way that there will end up being a lot of on-chain activity happening.
Cool. Well, yeah, thanks for doing this. Thanks for coming on, and it's been really interesting diving deep here. And I'm really curious where this whole twin turbo consensus stuff goes, and if it gets sort of added into the Cosmos SDK stack. And I think that would be really beneficial for the entire ecosystem. And yeah, also looking forward to seeing what other kinds of applications get built on Say. Yeah, what's the roadmap, and where can people go to learn more, and what's your call to action?
Yeah. So call to action would be join our follow Say Network on Twitter. So that's SEINETWRK. That's where we're going to be posting a lot of updates. Afterwards, you can also join Discord to get more involved in the community. In terms of the roadmap, right now we are in an incentivized testnet, and we're giving away 1% of the total token supply for incentivized testnet participants. So anyone that's listening to this, if you want to get involved with Say, you will be rewarded for doing so as well. So definitely check
I'll
out
do
the
that.
Discord. Awesome. Yeah, check out the Discord for more information on that. And yeah, we're planning to have a mainnet launch happen sometime Q1 of next year. So stay on the lookout for that as well. We're code complete from the Say Lab side at this point. We'll get the code audited, and then afterwards, there will be a decentralized launch that happens sometime next year.
Great. And final question: who do you think I should have on this podcast?
You were mentioning the Nitro team, so I definitely think you should have them on. I can make an intro to you afterwards as well if you'd like.
Okay, cool. All right, Jay, thanks so much for coming on.
Awesome. Thank you so much for having me on, sir.
And to our listeners, thank you for tuning in. We're a couple of people in the live stream today, so thanks to you guys, and thanks to specifically, I want to thank those who are coming in like every week, because I see you guys in the chat, and yeah, just want to say thank you to those who've been following this process and helping me grow the channel. Please make sure to subscribe, hit the like button, and the notification bell to get notified, because we go live every Thursday, and we got another podcast lined up next week, and the week after that, and the week after that. So all kinds of great content coming out here on the Interop as we wrap up the year. So thanks so much for joining, and thanks, Jay, once again, and we'll see you next week.